agenda for the night. You'll meet our presenters. Jessie will talk about some real estate insights. We'll have Bernadette and Steve chatting. You're talking as well, Bernadette? Yeah, lovely. From Optian, and we've got Lee talking a little bit at the end. Then our usual Q&A session. So if you'd like to leave your questions until the end, in your booklet there's a little spot for you to write some notes if you have some questions along the way. But let's get into it. So for those of you who don't know, this is Jessie, who's the principal of All Seasons Property. We've got Bernadette, sorry about knowing your last name. Delaunay, yeah. And we've got Steve Dix from Optian. So you both, your office is in Wollongong?
Yeah, our main office.
Yes, yeah, lovely. And then we've got Lee from Conquest Landing down the end. And I forgot to introduce myself. My name's Lucinda, and I'm the office manager of All Seasons Property. Rightio, let's get into it. So we'll introduce Jessie and she'll have a chat about her real estate insights.
Lovely, thanks Lucinda. So thanks for coming along tonight. So property insights. So one of the topics that I want to talk about tonight is why sellers feel confused about pricing their home. One of the biggest reasons sellers get confused about pricing their home is because they listen to every Joe Blow on the street. They take in this opinion, they take in that opinion. And Mary down 3 doors up, she sold for 1.5, and so my property must be worth about that, even though it might have completely different features, and there's lots of different ways that we assess value in properties. So the best way to actually get a proper valuation if you're looking to sell and go to market is to talk to someone that does it day in, day out, and that's what their job is, rather than listening to someone that might not do it day in and day out and just scrolls through realestate.com and does it as a little bit of a side hobby. So they listen to all these numbers getting spat out from their friends, their family, their co-workers, and anyone else that'll listen. But sometimes that's not the best way to go about getting the price right when selling your property. And pricing it right from the start is one of the most key aspects of having a successful property campaign. And then there is differences between the appraisal and then the valuation and then market price. And so we go through a thorough process. It's called a comparable market analysis, otherwise CMA, you might hear us call it. No, that's okay. And so, yes, we'll go through a comparable market analysis, look at all the recent sales that have happened in and around your area, taking into particular consideration things like how many bedrooms, how many bathrooms. Might sound like the basics, but we really do have to differentiate what's put value on a particular property over your property, or where your property may see better value than another property. So having that differentiation between an appraisal and a valuation. So a valuation is what these guys do. They do an actual bank valuation. So theirs does slightly differ to what ours is. Ours is what we are trying to get you the best price from a buyer in the marketplace, whereas they're assessing things a little bit differently, and I'll let them go into what they do. And then the market price is what the buyers actually will pay for your property. So we can go in, on paper it looks like it's going to be worth $1.5 million, but then you've got another 50 properties on the market at the moment that are worth $1.5 billion. And real estate's about supply and demand. If the supply is high and we don't have a lot of demand for it, it's going to pull the prices back a bit. So whilst on paper we might be able to justify 1.5, for example, it might be pulled back because we've got so many other properties that we're competing in with, and it might pull it back to 1.45, 1.42. So that's a little bit of the difference between where we see value as an appraisal and where the market will see value when you actually take the property to sell. And look, market conditions can vary. As I said, it is a supply and demand industry very much. So at the moment, we are seeing a bit of the supply drop down, which is encouraging for sellers. Makes it a little bit trickier for buyers at the moment, that there's a little bit less stock to choose from, in the Southern Highlands specifically, of course. Other marketplaces will be trading differently, but certainly in the Southern Highlands, the market supply has dropped down a little bit in recent months. so making a little bit more buyer competition. But what the sellers really want to be able to see is confidence in the price that we put on the property and how we got to that point. And that's why we really do, other than being a legal requirement, we do like to provide you with as much evidence as we can as to how we got to the number that we were appraising the property. We're not just plucking numbers out of the air. There are online valuation tools. I wouldn't take those as gospel. They obviously just take in a bit of a median price across your general area for a specific period of time, and they may not take into consideration attributes of your property. For example, if it's got a view, if it's got something that's a little bit different, if it's got some architectural features or historical features to the property, those types of things aren't taken into consideration with the online valuation tools. And sellers actually don't tend to take a step back. It's hard to see your house as a house and not a home. So sellers can often be so emotionally invested in their own property, which is fine, that they've got the rose-coloured glasses on and they don't take a step back and really have a look at what buyers are looking at when they see their house. And so when you're going to sell your property, it's really important to just take a step back and clear your head and go, what is a buyer looking at when they're seeing my house, and be a little bit critical on yourself. And that's where bringing an agent in as well certainly comes into play and helps you out with having that clarity and having that little bit of a distance to be able to get the best sale result that you can in the market. So as I mentioned before, we do a comparable market analysis. So this is where we've got access to programs, CoreLogic, RP Data, and they spit out a whole heap of information for us. We don't have to go trawling through the internet to find it. It'll be a nice concise report, and we can compare properties in the local area. The more experienced the agent is, the more refined they know as to what properties they're comparing against. Sometimes it is a little bit difficult, like if there is a property that has some really, really unique attributes to it and it's really left of centre, sometimes it can be a little bit more challenging to determine a price on that property. But most of the time we can gather enough resources and enough information from our comparable market analysis to make a really good appraisal value on your property. And the things that we take into consideration too in that report is how long it's been on the market, those other properties that have sold. So we can see if how the market is trending as well, if it is a bit of a slower market, which is a little bit what we're in at the moment, and what the buyer demand is like. As I said, supply and demand, low supply, high demand, normally a bit higher prices. High supply, low demand, your prices get bumped down a little bit, and where the market's trending for that particular suburb. And then we also look at the presentation of the home. So when you're selling a house, and this won't necessarily come into play as much for bank valuation that Optian do, but when you're selling a house, the presentation really is key in optimising your sale result. So having it clean, having it decluttered, taking away things that don't need to be there are really important things to open up the spaces for your property so that buyers aren't distracted by things that aren't even going to be there in the first place when they settle on the property. So taking away those distractions to show what your property really has, and definitely if there's been any renovations over the time as well, that can add value to your property. So you pick up the phone, you go, I'm going to sell the property. What happens? So first off, we'll make an appointment. So at a time that's convenient to yourselves and ourselves, we'll come out to your property and have a look around. Most agents, good agents, should be doing a bit of market research before they get out there. Sometimes we don't know too much about your property. We'll probably ask you a few questions on the phone. How long you've lived there? Have you done any improvements in time? Did you build the house, or was it something that you purchased already built? Ask a few questions leading up to the appointment. We'll come out. Normally takes about half an hour, depends how chatty we are, but normally about half an hour of time is a good amount of time to see your property, have a chat about the next parts of the process if you are considering on selling, Then we go away, do a little bit more refined research now that we've seen the property in person, have considered any additional renovations you've done, any views that may not have been able to be seen from a street view, and we'll do a market appraisal for you. And then we will also check what else is on the market at the time that the appraisal is done. That can obviously change. If you get an appraisal done and you don't decide to sell for another 12 months, definitely recommend getting another market appraisal, just an updated one, because market conditions can change. The properties that we're competing against at the same time will definitely change as well. So that's all part of the appraisal process. So tips for buying in today's market. So if you're buying in the Southern Highlands market, I can't really speak too much for other marketplaces. We really do focus on the Southern Highlands, but Southern Highlands market still is a little bit on the slower side, so generally we'll have a little bit of time to have a look around, really make an assessment. There'll still be properties that stand out and walk out the door a lot quicker than others. But for buying in today's market, do your research, have your ducks in a row, have your finance organised, or have a plan as to how you're going to be purchasing the property. And really have a good understanding of the areas that you're focused in. And tips to selling in today's market: first of all, get your house appraised. And when you get an appraisal done, just by the way, your house doesn't have to be spick and span and prim and polished. You can have us come around and we've still got laundry sitting on the bed. We're not going to look at that. We're there to look at the property and the features that the property has, and to guide you into the next steps as to what you should be doing to prepare your house for sale as well. So whether you need to have a really good spring clean, whether you need to paint some walls, whether you need to attend to some repairs, which attending to repairs is something we always recommend. But be prepared if you are selling in today's market. Probably not necessarily going to walk out the door really quickly unless you've got one of those standout properties that everyone's after. Most properties are on the market between 60 and 90 days at the moment. So just as a reality check, don't think that first open home is going to deliver the result, even though it sometimes can. And that's probably about all I've got to say. So I'll pass on to Bernadette, and she can put you from the back values desk.
Okay, thank you. Standing up, Steve. Look, first of all, thanks very much for having us. We're really excited to be here. I'm Bernadette, this is Steve. I live in Kiama and I service the Shoalhaven and Illawarra area. Steve lives here in the Southern Highlands and just services that area, and we both work for Optian. Optian is a fairly big company. It's an international company. We have offices all throughout Australia, New Zealand and the States. In Australia, we employ over 500 valuers and we service about 98% of postcodes. So it's a big company with really significant coverage in this country. What we do is fairly specialised and fairly technical. It's a little bit different to what you were talking about with your appraisals. We do obviously use some of the same methodologies in terms of looking at comparable sales when we do our analysis. But when we come out, we are looking at slightly different things. So you want to go into that in a little bit more detail about what we do when we come out to a property to inspect. But in terms of our clients, we do mortgage valuations as we spoke about, but we also do a lot of work for people like accountants, lawyers. I think Steve was going to spend some time on talking about expert witness reports. We're often required to attend court and represent property interests in expert witness reports, which can be quite complicated and detailed. We also do development and construction reports. Some of our reports we may be asked, and we are frequently asked, to assess the value of something 20 years ago. They're retrospective reports, so these are quite difficult. It's very difficult. I mean, obviously looking at things in a current market value is one thing, but going back significant amount of time and figuring out what a property was worth quite a long time ago is a difficult task. But they're some of our clients. Obviously banks would be one of our major clients that we service on a daily basis. The sorts of reports we do are about properties across the board. We'll do commercial, residential, rural, agribusiness. We even have plant and machinery experts. So we do provide a very broad sweep of property valuations for a variety of clients for a variety of purposes. Steve, do you want to have a chat about, coming out on site and what we kind of do?
Yeah, so the bank will order the valuation, and then there'll be a text come out to you just to say someone will be in contact soon. Then the valuer will give you a call and tell you the time, and from there it's just a quick walk through of the home, getting all the features and fixtures and noting them down. There's about 5 or 6 photos taken, front, back, kitchen, bathroom, and a feature or two. And then there's some measuring involved where we measure around the house to get the size, and a bit of a walk around the block, or if you've got more of a rural property around the paddocks, and measure sheds and that sort of thing. And then the bank, from there we'll do all the research and electronically submit the report back to the bank, usually within a day or two. And then they go along with their loan process from there. And that's the minimum sort of with banks that we do. There's other sorts of valuations that I'll order from in-house averaging systems, and then a desktop valuation where the valuer will just be contacted and just not leave the office and go off online searches, that sort of thing. Then there's a curbside assessment where the valuer will go and just park out the front and take a couple of photos from the car. And then there's the Property Pro or short form where we go inside the home, which we just spoke about, and then long forms, and then other types of properties like commercial and industrial and rural and that sort of thing. Just in general locally, so we have 3 staff here locally and then 1 up in the Wallandilly area. I got to the area back in 2010 and that's when I first met Lee. And then my wife and I, we went in and organised with Mortgage Choice back then with John Pearl and Phil and Lee, and we bought a block of land in Mossy, and then we built a home there. So we've been around there for about 15 years now. And then the kids have gone through local schools like Chev, and I was always a netball dad because I had 3 daughters. So yeah, that's generally our involvement here, and the local team will do the Highlands and the Wallandilly, and then we're part of the wider group, as Ben said. Did you want to say about that?
Oh, look, yeah, I mean, just in terms of our qualifications and skill set, we obviously do a degree, of course, to become qualified to be a valuer. Once you are qualified, then you have to work under somebody else for a period of time and obtain a lot of experience. Obviously, our skill set's pretty broad. We have to know LEPs really well. We have to understand zonings, caveats, covenants. We need to know how to read leases really well. We're often required to do construction reports, so we need to understand building contracts, building materials, what they're worth, what costs are involved, what subdivision costs might be. There's a whole range of specialised skills involved in this job. So once we become a registered valuer, there is a period of time where we have to work, under somebody else until we obtain all of the required skills. Steve and I are both what's called a CPV, which is a Certified Practicing Valuer, which means we've been doing this a long time, even though we look really young. We've been around a long time. I've been doing it for more than 20 years. So once you're a CPV, you've got very little restriction on what you can value and what you can do. We fall under what's called the Australian Property Institute, the API. That's our sort of governing body, if you like. We all have to be members of that organisation. They set a very high standard in terms of ethics and what we're required to do in our job, and we have to adhere to that. So that's what Steve was referring to in terms of the API. Cool.
And then just besides bank work, we also look after family law, stamp duty, jobs, capital gains tax. In terms of family law, things have changed a little since years ago. Before, the person getting paid out in a family law situation would get a valuer and say, "Can you make it as high as you can?" And the other party would get the opposite and say, "Can you make it as low as you can?"
No, I think we still get that a bit, Steve.
They hit the court, and then the judge would just be going, "What the hell?" So now they call it a single expert witness. So they'll get one valuer for both parties. Their duty is to the court, put the fair market value, what we think it's worth, without swaying too high or too low for either party. And then quite often that can get things moving and get past what is the property worth. And it really helps the judge in the whole process, or even just in mediation. So we do tend to do those a little bit too, which has just sped that whole process up. And the other one that we do, more so for banks and construction loans, is it'll just be a block of land, and then we'll get given the building plans, building contract and information of the build, and we'll actually pretend that house is finished. It's called an as-if complete valuation, and that allows people to borrow for something that's just land that's not quite there yet. And then on the way through, there's also progress payments that, as the builder does work, you know, there's the slab, there's the frame, etc. We'll come out and check and make sure that's done, and they haven't just put a bill in and gone to Queensland for a holiday. Yeah, so that's sort of an overview as well of just general types of, especially construction loans.
We've
That's
probably
probably
covered
it.
everything. What we were hoping, we didn't really prepare anything formal today. We thought we'd just more have a chat with you about what we do and bounce off each other. But we'd really welcome any questions. It's sort of a bit of not an anomaly, but it is kind of a grey area for people. People don't understand really what valuers do. It's a very technical field, and when we approach, and it's different to and obviously we have great relationships with real estate agents locally, and we have to, because we have to bounce off you guys and often seek advice and discuss things. But we do look at it from a more clinical and more technical perspective. We are probably more interested in what something is built out of, what fixtures and fittings are, what those items are likely to be worth, what they'd be worth to replace. Insurance replacement is another aspect of our job that we're required to do every day. So we not only value something as it is at the moment, the building, with depreciation over time, etc. We also have to look at what it might likely be worth to replace. So that's another aspect of our job. I think that's all I really had to mention. Is there anything else you wanted to talk about, Steve? Okay, awesome. I think that's it. Thank you so much. Thanks. I'll hand it over.
Thank you.
Well, I'm going to talk about the absolute other end of it now, is when we're arranging home loans, as to why we need a valuation, or why the bank or lender needs a valuation. So firstly, they're looking at what's the value of the property should you, in worst case scenario, you default on your loan in 2 or 3 months. What's the value going to be on that property to offload it should you go into default? Now that was old school. That's, you know, still floats around a fair bit at a time. I don't see that so much now, but that was the old reason for it. The main reason that they need to get a valuation is to work out what the property is worth compared to your loan. That's the loan value ratio, or we call it LVR. Now the LVR is going to determine what product with that lender and what interest rate you are going to be paying. So it's very important that we get that valuation fairly soon. So quite often, if we're doing a refinance or a new loan, you're about to purchase something, we'll do that valuation very quickly, because that's going to determine what loan product and what interest rate you're going to be paying, but also then, can you afford it? I then am looking at the calculators, and can you afford it with your borrowing capacity? So as a LVR is also going to determine what policy. So whatever tier you are in, if you're over 80%, if your loan is going to be more than 80% of what the value of the property is, then you might be paying mortgage insurance. There's going to be other policy requirements come into it. So you can see that everything is pivoting around that valuation. So it's very important that we get that sooner rather than later. Now we get the valuations for all sorts of things. Steve and Bernadette were talking about those. So if you're purchasing, we're going to be obviously getting at that. We'll supply the valuers with the contract of sale, so it's important that we have that sales advice or the contract of sale with the amount on it, so we can just see what offer's been already accepted. If you're doing a refinance, we definitely want that valuation, again, to make sure you're not paying more than you need to, or not going into mortgage insurance territory. We've already talked about the construction, the as-if completed, and making sure that the builder's building the house as the loan's been approved for. And also that if we're doing any out-of-contract items on that loan, so if they're including a driveway and fencing or some extra landscaping has been included in the loan approval, we just also need to make sure that that's been completed as well. The other thing is major renovations. We've got one going at Goulburn at the moment. All sorts of fun that's been, because they were taking out one wall, major wall, adding another bedroom, adding another living area. And the builder has gone AWOL a few times. We had to really pull him back in and trying to keep him moving along so that we can get the valuation done of the progress payment to get this finalised. So sometimes it's not as smooth going as we like, but it's keeping everybody in check that they need to be doing. The other thing is, if you want to increase your current home loan, somebody might be wanting to, for all sorts of different purposes, getting some extra cash. They might be wanting to buy a car, but leveraging off the security of their home. They might be wanting to do some landscaping or something like that. Well, we need to see what the value of the property is before we increase their loan as well. So that's a few things that the reasoning behind doing the valuation. Now, the things that the lenders are going to be looking at is obviously the value of the property. So your loan value ratio, or the amount that they're going to let you borrow, is going to be based on the lower of the valuation or the purchase price. So we don't often see the valuation coming in higher than the purchase price, but quite often it does come in lower. For different reasons, it comes in lower. So then we have to rejig our figures and make sure that we're still within the boundaries of what that loan application is. The property details, they're very much looked at, so just making sure, is it a 2-bedroom, 3-bedroom, 1-bathroom, especially if it's an apartment in, say, the Wollongong, Sydney area, does it have a car space? That can often, make a big difference as well. And then the location. We're looking at what other environmental issues are around, and I've got a valuation here that I had from a few years back for one of my clients. It was near a train line. It was a unit down near Sutherland, and it was near a train line. It was a high LVR, so it was going to have mortgage insurance. It was a first home buyer, and the lender decided it was too high a risk, they didn't want it, and the mortgage insurance actually knocked it back. So the client had to find a different property, and we just couldn't proceed with that particular property just because of the location. So that's just something to just be mindful of as well. The rental, there's a rental figure always goes on the valuation, and we use that when we're doing an investment loan. So we'll get a rent appraisal from our trusty real estate agents, and then we have the valuation. And again, the lender is going to use the lower of that rental amount on the valuation or the rental appraisal. So real estate agents tend to put a nice scope of rent available. The lender will always use the lower of that range as well. So we just need to be mindful of that when we're working out our calculations. The zoning does come into it. You'll find that, especially on the fringe, if it's on a fringe of an industrial area, rural areas as well, we get quite a bit of that. And again, lender policy determines some lenders won't lend for rural. It's just simple as that. So again, getting that valuation early is really gold for me, having all that information up front, and before we start going down, looking at lenders and filling out application forms too soon. The risk ratings are probably the big one. There's the ratings out of 4 or 5? 5. So when we're getting up into the 4s and the 5s, if a feature or some kind of evaluations between a 4 and a 5, that's when the lenders start getting nervous, and usually we can't proceed with that. Sometimes we still can, but they might only lend a lower, lower loan value ratio. So it might have been 600,000 before that they'd lend, or now they might only lend 400,000. So it's again, everything's pivoting around the valuation. Valuers' comments come into it a little bit, but the main reasons that there's different types of bells that you've already talked about. The reason that there might be a fully inspected valuation is when there's mortgage insurance involved, so when you have less than 20% deposit. If there's government grants, so especially first home buyers at the moment, there's a few of them, if it's, they're getting the mortgage insurance waived, but the lenders will still usually require a full valuation on those. When it's a non-arm's length purchase, so if you've got mum and dad selling to their children, or say their child, non-arm's length, or I've had one in Goulburn where a young single mum had been renting the property for ages, the landlord was in Queensland, wanted to offload, didn't want to go through all the open homes and everything with her young tenant, and offered it at a substantially reduced price. So again, non-arm's length, because it wasn't through an agent and she was getting quite a significant reduction in that price. And then the other ones, usually when it's 100 acres or more, the lenders usually need a full valuation on that one as well. The other thing that is on the valuation that we have to take into account is the insurance factor, and the lender will use that as the minimum insurance required, because you must have insurance when you're getting a home loan, and that must be organised before settlement. So that insurance, minimum insurance that's noted on the valuation, that's what the lender is going to require you to insure the property for. The rental estimate we've talked about, and usually they'll need a full valuation if it's bridging finance as well, because there's two properties involved. So, hit me up with more questions as we move on, but that's pretty much what we do, and how valuations are impacting getting your home loan.
Thank you everyone, that was lovely. So I've got a few questions prepared as always. Some of you that have been to a few of these, because usually everyone's too scared to put their hand up. So I'll just start with Jessie. Do you ever have clients push back against your appraisal, and what happens then?
Yes, we do have clients push back on appraisals. Surprise, surprise. So, as I mentioned before, homeowners are very attached to their home, rightly so, and so they quite often see value a little bit higher than where we can justify. Can we take the property to market at a higher price? Of course we can. But at the same time, if you want to really capitalise on the marketplace that you're working in at the moment, it's best advice is to trust your agent's advice. Get a few different agents' opinions as well. They will differ. Different agents have different approaches as well as to how to sell property, whether it's an auction campaign, private treaty sale, and a good agent should be able to explain the difference between and what's going to be the best approach for you to get the best sales result. But yes, we do certainly get some pushback on price, and it's often just because the whole emotional factor from the vendor having invested so much time, love, energy, memories, all sorts of things come into that. And so, and as I said before, sometimes talking to other people's and getting their opinion as well can distort their view of what the real market value is on the property. And so definitely stay grounded and get a few different professional opinions on where your property is valued in the current marketplace.
Thanks, Jess. I think you did brush on this a little bit in your talk, but how long do your appraisals last for?
Yeah, so in general, I'd probably stay around 3 months. We can tend to see different cycles in the marketplace, selling at different times of years as well. Whether it's a spring market or a winter market can make a difference as to where your property's valued at. So especially if you're getting to 12 months, if it's been 12 months since your last market appraisal and you're really, if you've been thinking about it 12 months ago and then shelved the idea, get a fresh market appraisal, because the market can change quite significantly in a 12-month period. We experienced that during and post-COVID as well. The market changed quite dramatically, and so you wouldn't, certainly during those times, you wouldn't have wanted to rely on an appraisal that you had done 12 months ago, because you'd be selling at a much lower price in those periods of time. But the same goes for the current market that we're working in at the moment. So if you had your appraisal done in March but you're thinking of selling in spring, and an agent should be doing this as part of their legal requirements as well, in terms of an updated market appraisal as to what properties have sold in that time between March and say September. So the market can fluctuate. It has been pretty steady in the Southern Highlands over the past 9 months. We've seen a slight increase, but yes, definitely have the market appraisal done sooner than when you're going to be selling. I wouldn't rely on something that's too old.
Thank you. And now can you get your crystal ball out for me? And if interest rates are cut again next week, do you think prices will go up?
Million dollar question that everyone always asks. So yes, I wish we did have that crystal ball to know what was going to go on. Look, having the interest rates drop hopefully next week with the next RBA announcement, it should not necessarily drive prices higher, but just increased buyer confidence would probably be more of what would happen. At the moment, the buyers are still a little bit hesitant. We have seen a bit more movement this year than last year, but I wouldn't expect to see huge jumps in property prices, just an increase in buyer interest and then acting on their plans to actually purchase a property. So not leaps and bounds, but more confidence creates more market interest, which creates more competition. So can certainly have an ongoing effect in getting a few extra dollars for your property.
Thanks, Jess. Now I'm popping Bernadette and Steve on the hot plate now. If a home has extras like farm equipment, etc., do you include that in with the valuation?
Happy with? Yeah, definitely. Yeah, definitely. We do look at the dwelling and obviously all the fixtures and fittings within the dwelling, but we definitely take into account ancillary items, things like sheds. I mean, in a rural area, machinery sheds, stables, dams, fencing, driveways. We do attribute value for all those things, and we definitely take them into account. Yeah, 100%.
Is it a valuer's responsibility to declare if they find something on the property that is unapproved by council?
Yeah, I'll let Steve do that one, but yes.
Yeah, we have to do that.
Yeah.
So our reports last for 3 months, and lately the last stat I heard for Sydney was 1% growth. That's the latest figure in general, and then we've found the area steady as well. Hasn't been any real movement. And a bit of reluctance and with interest rates. So as soon as they go down a bit more, you should see some more positivity, which would be great.
Awesome. Thank you.
You just answered my next question, which was how long does a valuation typically last for? So
yeah, 3
months. What's the biggest reason a valuation might come back lower than expected?
That's a tricky question. When you talk about expectation, it depends whose expectation. So obviously we talked about vendors and vendor expectation, and sometimes that can be unrealistic. When we're doing a mortgage valuation, we're generally given a figure that the valuation is expected to be around. We don't take that into account too much because we don't know where that's come from, but often that is the owner of the property, so they may feel that their property is worth more than it is. So that would be a common reason. Normally sales are supported by valuations, but sometimes they're not. Sometimes there is an out-of-line sale or an out of, that doesn't match up with everything else that's been sold around it. So that would be a time where that might occur. The other sort of common time would be construction reports where a person is buying a block of land, they're obviously doing a build, and then they think the end result is going to be X, Y, or Z, and we may or may not find that in our research. Did you want to elaborate on that at all, Steve?
Just in general, there'll be things that the valuer's looking for and just in their experience be aware of, particularly local market knowledge as well, where the seller might not be aware of that, so we might have more heavily take that into account, and then that could be a reason why there's a difference. The situation, Lee said, with the lady, the tenant buying for a cheaper price, so the value would realistically come in and be valued higher than that purchase price in those non-arm's length transactions. So that's an example of that one would be higher.
Yeah, it can go either way, can't it?
Yeah.
Yeah.
Thank you. I'll come down the end for Lee, so we're not passing back and forth. So for Lee, who pays for the valuation?
The valuation fee is usually paid by the lender, and that's included in your bank fees or your lender fees when you're applying for the home loan. Occasionally with some alternate lenders and in a very unique situation, sometimes you need to pay for it up front, and in which case then you need to pay, we organise the payment of that, and then the valuer is organised. Just making a note that the valuers are independent to the banks. They're not owned by the banks, they're completely independent, and we don't get to choose who the valuer is going to be. So I could be ordering a valuation for Lucinda, and I've got no idea which firm it's going to be allocated to, and further than that, which valuer is going to be. We get notified after it's been booked in. That's notified which firm it's going to be, and then we don't even know who the individual valuer is going to be until we get the report. So it's all very independent, so that we can't influence the borrower or the broker can't influence the valuer to then manipulate figures.
Everyone's answering my questions tonight. You just answered my question, can the client choose the valuer?
No, not at all.
Does the client or applicant get a copy of the report?
Quick answer, no, not at all. It remains the owner, or the valuation report remains, is owned by the lender. We're not permitted to. It's a breach of our compliance if we even give you a copy, give the client a copy. We can have it on our desk and we can discuss it, but we're not allowed to give you, the client, a copy. In the case where I did have one case where the client actually did pay for it, and it was about $1,500. It was quite significant. They paid for it because of this particular lender. The loan didn't go through. They withdrew before it was approved, but the client decided not to go through. The fees were quite high, and they wanted a copy of the report. The lender dug their heels in and said, no, you're not getting a copy. It went to and fro for about 3 or 4 days, and in the end the lender said, well, they have paid for it. I sort of was on the client's side on this one. They have paid for it, and they did release it, but that's one in like 15 years that I've seen released. So yeah, not normally.
And you did brush on this one during your talk, but maybe you could elaborate a little bit. If the bank val does come in lower than the purchase price, what sort of things could you do to help the person, or is it just non-negotiable?
I can definitely help, because as each lender orders the valuation and that gets allocated to a particular firm, we might find that we might go to a different lender and they might order a different valuation. It may come in slightly different. Could come in exactly the same, we don't know. Sometimes a valuation we can we'll disagree, I suppose, is something we can go back and what's the word? Query, that's it.
Yeah, we get those all the time.
Yeah. And that was actually going to be my question.
Yeah.
In what situation can it be queried and overturned?
Yeah, I've got a good example. It's only a minor example. I have a good example where we completed a report recently and provided the rental, and the lender was very reliant on the rental figure because it was an investment loan, and the rental came in probably below what their expectations were. So they queried that and they said, look, we've had a look at it, we've spoken to some agents, we feel like you're a bit light on with your rental figure. Obviously when we research rentals, we're looking at a similar pool of information that you are and our local knowledge, what we've done in previous reports. But they said, look, are you willing to, if we're going to query that aspect of the report, are you willing to look at it again? Yes, of course we are. And we did amend that figure and revised it slightly up. So that's a recent example of just a minor part of a report, but it has to come back as a formal query. The query has to have some evidence attached to it for us to look at it, and then we will look at that and review it and have it authorised by another valuer as well, so that we make sure that we are doing the right thing. So we're happy to accept queries. We do make mistakes. They do happen, and sometimes it's to do with title information or a minor aspect of the report, but with this recent one it was to do with the rental, which we were willing to revise upwards because we felt we were a little bit light on. And the lender was very reliant on it in that case. So
There could also be a feature of the property we may have missed, so maybe it was a cloudy day and there was this magnificent view we didn't get to see. So that could be Go on there, Sue. So that could be a key component that we might have missed, and we're always happy to review and look over things, especially if someone does have some evidence, because that's what we really rely on, the sales evidence. So if there's something extra, we can look at it and go from there.
So, thank you. So, yes, to finish that question is that we then look at possibly looking at a different lender and ordering a different valuation, and just seeing if there is any difference there. But I've got 30 or 40 lenders on my panel and an awful lot of products. I think it's about 400 products between all of them. So we've got a fair bit of choice, benefit of using a broker. So it's never a no. I love a challenge. The girls know, love a challenge, and yeah, we'll. I'm still conservative, but we'll still try to make it happen if we can.
Lovely. That's all my questions. Does anyone have anything they'd like to ask while I'm up about? Did you guys have anything else?
I have one more thing.
Yeah, sure.
Great.
Thank you. There you go.
Just with the photos we take on a job, it's never broadcast around anywhere. It won't end up on the internet. It's just on our system and the banks and in the report. So it's not something that that'll end up, broadcast around, just so you have a bit more comfort about that. We're quite bound by privacy and contracts and stuff like that. Yeah.
That's kind of true of everything in our reports, really, that everything is confidential. We obviously go into people's homes. It's a very private space. It's very intimate. So yeah, you can take some comfort in the fact that we keep all of that really private.
Lovely. Thank you so much. So we're running a little bit ahead of schedule. We normally finish around 7 o'clock. But yeah, please feel free to hang around and ask any of our experts questions. It's a good opportunity to find out some more information that you might have a burning question, but you're too afraid to put your hand up. We do record, for those who haven't been here before, we do record this session and pop it on YouTube, so that'll be available in a few days. Your booklets are designed to be added to, so if you come to another event you can add to it, so hopefully by the end of it you have a comprehensive guide of lots of information about buying and selling and finance. We do have some previous events booklets up on the table, so please help yourself and add to your collection of what may interest you. A massive big thank you to Bernadette and Steve for giving up their own time tonight to come along and give us lots of wonderful information. I know I learned some more things myself. So yeah, really appreciate your time. And yeah, basically we hope you have gained just even a small piece of knowledge from tonight. We really are passionate about giving the community our free advice, and we really do enjoy it. So if you did enjoy tonight, please tell your family and friends. We'd love to see a few more bums on seats. And yeah, hopefully you had a good time, eat up all the food, and hopefully we'll see you next time. Thank you.